All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. It was a really flat night overnight with S&P futures. Traded in a 5 point range, very tight range for for any market, let alone this market, and so extremely tight. And generally, when you have a really tight range, what does that mean? It means you don't get a lot of movement the following day. Now, on the open, we did get some movement. We saw S&P futures fall about 12 points off their highs, and you can see they've kind of done their normal, just snap on back here into kind of retracement areas. And let's face it, so many intraday charts have looked like this over the last several weeks, where we just don't see a lot of big gains mounted on during the day. But we also don't see, losses coming in during the day. If we back this out to a 15-minute chart, you can see what this looks like. We had Friday's gap, right? All of this action was gap action, and a lot of the upticks that we have seen have been gap action. You look at the overnight periods, which, if I shade them in here, a lot of these overnight periods have had sizable gaps or gaps that are responsible for the majority of the gains in the market here of late. And nothing all that new here with it today. There's a lot of things out there where you can't really say, hey, it's game changing or something's dramatically different. Maybe in a few areas with tech and whatnot, you can kind of look and go, well, you know what, we have some minor breakdowns starting to happen. But even something like an Amazon, right, which this morning was down, $16? It's rallied all the way back. These little dips are getting bought, continue to be bought, but, they're not chasing them, like on Friday with the gap ups. They're not being chased, very aggressively. Now, I'm on just a few minutes early here for the challenge and for the challenge update here. And you can see here in the spreadsheet there are two signals that are come in. Now, I'll confirm these here in 8 minutes that they're there, but it would take a lot for these to change. One is with Netflix; it's a bearish signal that's coming in. One is with gold, GOLD. The actual ticker symbol, not the actual metal, but the ticker symbol, GOLD, is triggering bullish here today. And let me just kind of show you Netflix here. And, this is one, I talked about on Friday, had a chance of triggering. It didn't trigger Friday, is triggering here today. Now, one of the issues with automating anything, right, is, what the option values are going to be when the signal gets in, and does that allow you to, apply these options? And it's one reason why you don't see Amazon or, other real high valued stocks in the watch list for this challenge. Not that they're not playable, not that they don't have good signals, but sometimes the options can just be out of reach. And when we go and we look at Netflix options right here, and we look at this challenge automation, right? If we go out 30 to 60 days and we look on the put side, we're talking $15 for an option. So that would be for one contract putting in 1,500, which is more than what we have to allocate to any given trade, right? We could go out of the money, right? But out of the money just changes the dynamics in a big way. And so, okay, can't really do it on that watch list. If we go to the shorter period, the 14 to 20 days, you'll notice the options are almost the same price. They're still very expensive. And one of the reasons is that Netflix has earnings upcoming here. So the earnings are priced in here to the options. Now, that doesn't mean you can't trade them for the challenge. You'll see tomorrow after the bell, Netflix earnings. It doesn't mean you can't trade it for the challenge. We have a basket, set up for the for all plays, regardless of earnings. And then we have, this basket up here that excludes earnings. But the options themselves exclude us from being able to play with it simply for the price of those options. As it gets rolling, as it grows, that won't be an issue, but it is a hindrance here at the beginning. We are seeing that come in with Netflix here today. So not very tradable here for me. If you look at the rest of the watch list, Alibaba, it could get into that that type of area. Apple possibly, especially ahead of earnings. But outside of that, we're not going to have an issue with most of the other stocks that are here. But these higher ones, the Netflix, Baba, Apples, they're just going to have a few more of these, time periods. So I put the signal in here, but it's not going to be used in the challenge, and it just simply due to option price, right? No, due to option price, right? And so we'll log that. I'll record that here, and we'll know what's going on there with that. Now we are seeing a bullish signal come in, and that is on gold, GOLD. And if you look at the chart here on GOLD, you'll see it has a little bit of a bullish engulfing on it here today. And gold opened up weak this morning, and GOLD opened up lower, but it's just been clawing back, the entire day here. Bullish engulfing in the middle of flat Bollinger Bands, in a consolidation area. These are generally a little tough for me to want to buy or for me to want to get aggressive with, but the bullish signal is most certainly in, and it's a strong one, so going to run with it here for the challenge, provided that signal lasts for the next 3 minutes, and if it is, we'll go out and make the trade here with GOLD. Now, this is Barrick Gold. If you look at some of the other gold miners like Newmont, it's not doing the exact same thing. Right? You look at Goldcorp, it's not doing the exact same thing. If you look at the GDX, the gold miner ETF, it's doing something similar, but still looks a little bit different, right? Going to GOLD is the only one on the watch list that is triggering here today, and going to run with it. This is one we've talked about. My bias, I think this goes to a new high. Here eventually, you can see the long-term kind of consolidation area that it's been in. Tried to break out, has pulled on back a little. You can see the low volumes on the pullback now showing a little sign of life, and sets up very well here for trading higher for the challenge. So going to go out and do it. Now, first thing I have to look at is when are earnings, right? To see if earnings are going to come into play here with Barrick Gold. And whenever I'm looking for when does a company report earnings, I want to look at several sources, because sometimes they're just not correct on different sources. But it's May 15th, and this has been confirmed on other sources as well. So earnings are not something we have to worry about here with this and with this trade. Now we're going to put about $800 into the trade. And if we come into GOLD and the options here, we're going to be looking for the 14 to 20 day range, and that is the 3rd of May. The 3rd of May, 13.5s, and the 3rd of May, 13s here, and those are the ones that are in play. Both of them slightly in the money. One about 50 cents more into the money than the other. And then on the third basket, we're going to be coming down here to the 13, the May 13s. They're going 87 to 92. That's a little bit of a higher spread. That's about a 6% spread. That's not a fun spread to deal with, and it's not one that in real life we can trim by very much. In real life, we could trim it by about a penny. We'll get filled, no problem. But realistically, to trade this into the half, it's just not going to happen. Market makers would not let us, get away with that here with something like GOLD. All right, so here we are, 1 o'clock or 3 o'clock Eastern, and the signal is still valid. So we're going to pull in these 3rd of May options here, and 46 cents is going to be our fill price. That is the ask price, so not splitting that at all. In real life, live trade, could that fill at 45? It could, but we'll go with the 46, and then down here at the 19th or 17th of May, we'll go with the 91. We'll just go with the ask price here on those and run with that. Looks like we have jumped down to 45 here, so I'm going to put it at 45 for that fill. All right, so let's go log these again. The penny here and there isn't going to make or break anything, and obviously there's a little discrepancy from time to time. But let's go with GOLD. Entry date 4:15 and p.m. Right. We're looking at the this one here is the 3rd of May. The 3rd of May. And we're on the call side, right? So 3rd of May, 13.50 calls, right? And entry price 0.45. Trade entry price 0.45. The stock price here at this time, we need to log that is 13.65, right? 13.65. There we go. And we need to do about $800 worth, so we're going to do, 18 contracts? Is that what's going to give us the right cash in here? Yeah, 18 contracts, give us $810 in, and we'll be able to run with that. And then current trade price, 0.45. We need to log the average true range. Now, the average true range here on Barrick Gold, let me pull it up here, is 0.35. So 35 cents is the average true range. So what that's going to do is that's going to give us a stock exit level if it goes against us of 14, right? These are backwards here because this one was a put. So we're just going to go and let's go D4 minus H4. There we go. 1330 will be our exit level, right? And right here we'll have the same issue. So we'll just kind of flip our sign. There we go. 1435 is going to be our initial profit level there for that. All right, and then I'm just going to tag this so that it pulls in the price. It is a 15-minute delay there on Google Finance for filling that in, but it will fill that in there for us. And then this trade is open, and gain loss is 0 at the moment. Okay. All right, so that's the trade entry there, and I'm just going to copy this because they're the same in both baskets, right? It's the exact same in both baskets, and down here below it is a little bit different, right? In fact, I'm just going to paste this line here. Let's just go and paste it, and we'll put in the correct date here, 17th of May, 17th of May, and we're in the 13, right? 13 calls here. Yeah, 13 calls. All right. Entry price. Now the trade entry price, 0.91, right? And how many contracts? We have our profit level, the current price of the stock. So everything else is the same here. Trade is open. And let's see here. Our cash out is not calculating correctly. Let's make sure that is calculating here. All right. There we go. I'll get the correct price in here, 0.91 as the current, and we are all set. And so that one is in, it's logged, it's open, and off and rolling. Okay. Now the next time I'm going to check it tomorrow morning, and if we've hit one of our levels, here, then we'll look to take it off, look to peel it off, and whatnot there as that goes. Okay. So running here with the GOLD, or better known as Barrick Gold. Now tomorrow, today was pretty easy to sort, and we could have made 2 trades. Right? That would not have been an issue, so no sorting needed. But on a day where we get 2 or 3 entries and, we only have room for 1, or we get, 5 entries, we only have room for 2, how do we sort out those, for for trading, which ones we're going to run with. And I'll talk about the three methods of sorting and how it is functioning, how it is working, and how you can apply it to your own watch list and to your own trading there with these various sorting methods. So we'll talk about that tomorrow. And go through that in a little bit more detail tomorrow. We'll then, later this week, go through the ATR method and talk about this in a lot more detail. I did go through it, overview of it here in the video link, intro video link. But I'll go through it in some more detail, discuss it with a little finer tooth comb there. Okay. Now the market vibe here today is sitting at a 3. The market vibe is it actually is ticked down the last 2 days from 5 to 3. It's still a neutral signal with the bulls holding a few more advantages than the bears, and that's what has been, and it's what is continued here. With that, we're probably going to see the market itself push into a new high tomorrow. I'd be surprised if we don't see that print. It's may even do it into the close here today. It almost just kind of feels like that race is on, that it wants to print that new high. Those headlines, are ready to be triggered. The S&P at new high, and off we go. So it really kind of feels like that's what is coming, what is ready to happen. But we do see that the metrics are fairly balanced. A little bit more on the bull side than the bear side, and the signal still fairly neutral. And has this happened before? Yeah, we've seen it happen before, and it's one of those things where some of the short term doesn't match what's actually happening, and we definitely see that from time to time, and we see that right now. That exist in the market. At this point, there is a possibility of triggering a bull signal on the SPY. If that does, I'll go in and make the trade here for the challenge basket. And if a bear signal is created, we'll go and make the trade for the challenge basket. For a bull signal to be created, market vibe would have to go to 6 by Wednesday. For a bear signal, it would have to go to 0 by Wednesday. So those are the extremes, 6 and 0, to kind of balance that out or show that out where some of that signaling could happen at as we go forward here. Okay. All right, so in on some GOLD. As far as, other things and other possible triggers out there, there were some close ones, but, CAT is one that, almost triggered on Monday. It failed to trigger Monday. Had it been up a little today, I bet you it would have triggered. But it's actually, pulling on back here today. It will be interesting to see if it actually, creates a little whipsaw signal and a downside. But, you can see where the stochastics 39 is. And generally, we're not going to get a bear signal when the Stoke 39 is up in that level. MGM has kind of done something similar, to Caterpillar here. And, these aren't, terribly bearish actions with it. In fact, MGM, you can see, just fresh push up into the 50, 3-7 crossover. So, has some very bullish elements associated to the chart, but just not enough to trigger here. Just yet. Netflix and then Chevron. Chevron was one I thought might trigger here today. It had a big gap down on Monday or on Friday. We talked about why and what was going on there. You can see a fresh move below 50 on the slow stochastics, but when a company has a big gap like this, the algorithm goes back and it looks at gaps, historical gaps. And puts in some probabilities, and with some of these historical gaps, there's not a huge probability of quick early downside action. Some of it is a little bit more muted, and when it comes to Chevron, that's what the probability suggests based on how Chevron's traded in the past. But definitely not one I'd want to be long on right here, especially with what we have seen over the course of the last 2 days. I mean, you see Oxy Petroleum, who they didn't step up and buy Anadarko, right? They didn't step in and buy Anadarko, but Oxy's getting sold and sold to an aggressive degree. Why? because they were willing to go out and buy Anadarko. And it just ups the risk factor. And they're willing to pay that much. Oil companies have been known to overpay for assets, but it is definitely being viewed as a steep overpayment when it comes down to it. Now, is Oxy going to go out and buy somebody else? They could. They could. If you look at Oxy, I mean, they have a pretty sizable market cap. I mean, it's $50 billion. So it's pretty sizable there. They have plenty to kind of go out and make an acquisition, although it would put them in a bind, depending on the financing and everything. But, Anadarko, they went to $30 billion company, right? $30 billion was basically the price tag for it. So not unheard of for something like that, but definitely steep. If Oxy were to go out and buy somebody, are they going to go out and buy an EOG? Probably not. It's a little bit too expensive. Oxy has a lower market cap than EOG. But there's still some rumor around, some rumors floating about some other ones, possibly being taken over. But I do think this kind of puts a little bit of nail in the coffin to some of these NOVs or rigs, which I know, and there was a report bantered about today about NOV. But I think it does take some of the downside or the risk out of it for short sellers in the kind of deep water drilling space. Thanks for hopping on. Have yourselves a great one, and we'll talk to you tomorrow. Take care.